The relentless rally we've seen for gold, silver, platinum, and palladium over the last 4 to 6 weeks in particular is finally starting to hit some resistance to the upside. Momentum is easing, and we're seeing some profit taking. In this gold market commentary for Friday, January 16th, 2026, we'll take a look at the latest trading charts for gold, silver, platinum, and palladium to look at where the peaks are, where the support is, and how the markets are looking as we head into the close on Friday, January 16th. Hi, I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. If we can help you with any of your needs in the physical precious metals arena, we'd love to have that opportunity. So we're going to take a look at the charts, and we're going to do it differently than I have in the past with you. The markets are still open, but they're pretty quiet. And I thought that this might be a bit more interesting way for you to look at how the precious metals have moved over the last several months and the last several weeks and the last several days in particular. So this is the screen that I look at every day, almost every day for the last 25 plus years. These are the futures contracts as they're trading in real time for gold, silver, platinum, and palladium. And these are all 180-day charts that I've got up on the screen right now in 4-hour time blocks. I'm going to go through each metal with you and bring it down from 180 days to just a couple days trading to take a look at how we've gotten to where we are and where we could be going in the next week or so as these markets hit a bit of upside resistance, as the momentum is easing right now in all four of these markets. We're seeing some profit taking. We're also potentially seeing some of that rotation that takes place at the beginning of every year as traders adjust their positions based on profits and losses and proportion sizing from the previous year. So let's drill down on these four metals to see what's been going on. So this is the gold futures contract that goes back now 180 days in 4-hour bars. The price movement is in red and green bars on the screen. The red lines are lines that I have drawn in to show where I see support and resistance and trend lines. The blue bars that are here on the chart, that's volume. And then down below is RSI, or relative strength index. When the RSI is higher into the red zone here, that means there's a lot of buyers. And when it's down into the blue zone here, there's a lot of sellers. That's what that means, relative strength. So what I do is I look at this chart from a longer term and a short term perspective to try and see where the trend is, to see where support is, and where resistance is. So you can see this goes all the way back to May 5th here. And this red line, the first line that we've got, is upward resistance, where gold had hit but had not gotten over. Tested it here, and then we finally broke over in late August, over 35.20. That's where that resistance line is. Then the market moved higher. I put a support line in here. We moved above that. We hit a double top, 43.92, double top, and then we broke down. That's in October, when the markets peaked and sold off following the end of Diwali, the Indian festival season. Then we came down and we channeled and we hit support. First here, 39.53. We punched up higher. I had a resistance line at 41.86. We broke that. We moved into a higher trading range with resistance at 42.96. We broke that. Now in the last couple of just weeks, we've gotten to 45.83 and now a new all-time high at 46.50. Now I put this trend line in here from here to here earlier today, and you can extend this out into the future to the right and into the past to the left, and it coincides pretty well with where we were at this point in time. So let's drill down a little bit further. But fundamentally, we have an upwardly sloping trend line that when gold comes down to it, it bounces back off again. So that would be the target price for a downside move if we get a major correction. Now let's shorten this time frame now to 20 days. And you can see here's that upwardly moving trend line that I just mentioned. And here's the peak we hit right after Christmas, 45.80 basically. Now we've gone sideways and we've moved higher this year all the way up to 46.50 now. But we're starting to see kind of a shoulder formation forming or a cresting formation here. And we gapped up here, and now we're trying to we might fill in this gap, which is pretty classic. So I've got support here at 45.25 and support again here at 44.25. Let's drill down a little bit tighter to 10-day, 30 minutes. You can see a bit more clearly now we've gone over this week in trading. We've held up near 46.50 with support at about 45.75, but we're now starting to test that and get a little bit weaker as we move from Thursday into Friday of this week. 5 days, 5 minutes. Again, a little bit of a weakening pattern. Now 1 day, 1 minute. And we've got a little bit of a sloping trend. We had a big sell-off today on a high volume spike. So a big sell order hit the market that we bounced right back up again. So we're trading between 4,600 and 45.80, a pretty tight $20 range as we head right into the close on Friday afternoon. But I see the market being potentially a bit weaker than stronger over the next few trading sessions. You'll see this video on Monday, January 19th, which is Martin Luther King Day, and the markets will be closed. So it'll be interesting to see what happens when they reopen in Asia on Sunday night. Then they'll be closed for the New York session, and then they'll be open again Monday night. So this could change, but I'm seeing a bit of a weakening here, but I don't see too much potential attrition for gold. Again, I've got support at 45.25, which is below what we see on this chart. And then again at 44.25 if we get any real weakness. But gold is looking pretty solid, but a bit tentative in the short term right now. Let's take a look at silver. So here's the silver contract. Now I'm going to back it back out to 180 days because this really is quite interesting when you look at silver from a much longer perspective. Here we are back in May. We get to August when we got the breakout and moved over $40 in earnest. And we were in this trend line here, which once we got into December, right after Thanksgiving, when the market took off and broke higher right here, we moved into a taller trend. And now, just in the last week, we've broken into an even stronger higher trend, which has been just amazing to watch. So let's back this down a little bit to 20 days. And you can see here's the more shallow trend is here. The rising trend is here. And now we're in this much higher trend, right? This is the former top at 82.62. We tapped it twice. Then, on a Sunday night, we gapped higher this past Sunday, and we got all the way to 93.70 this week. And now we're starting to see the market sell off a bit on some profit taking. But we're clearly breaking down below this trend that we've been in. But the trend line that I've got here to hold support points to 88.25, and so far we're holding that, or narrow it back down a bit. 10 days, 30 minutes. This is clearly this really tall channel has been broken down to 1 day, 1 minute. Now I've lost all my trend lines, so let's back this out just a little bit. Oh, well, I've got you here. Let's talk about this. So here's the peak earlier today, or last night actually, yesterday afternoon. And now the market is trending lower. So we're seeing some profit taking from Thursday evening into Friday afternoon close. If we go back 5 days and 5 minutes, you can see we gapped up here. We took off. We peaked at 93.70 on Wednesday. And now we haven't seen that peak again. Thursday, we got to 92.96. And now we're in Friday and we're leaking. But I see support in the short term at 85 here. And this is really where I think we could get back to if we see some real weakness in silver, is where we gapped higher here. And that's between $78 and $82 where that second higher channel is. And we've been holding above it. So the next level of support I would look for would be at about 82.40. And then major support at 78 if we get that low. So that's what we're looking at for silver, the way this market has been moving over the last week or so. Let's take a look at platinum. This is a 180-day platinum chart. You can see I have a lot less trend lines on here simply because platinum has been a lot less interesting to most of my clients, but now that it's breaking out, it's bringing a lot more interest in. For most of the year, platinum couldn't get over this spot here at 1500. We move into late September, and then we break that 1500 mark, and we punch all the way up to 1765. We correct back down to 1600, actually 1499. And now, since Thanksgiving, platinum has taken off. So this is a 4-hour bars going back 180 days. We're going to make this 1-hour bars on 20 days. And you can see from here, we've seen platinum go from 1975 all the way to 2585, essentially, where upward resistance is. Last week, we hit another peak, but a lower peak at 2487. I've got support here at 2117, and that's really where support will be. We could put another support line here if we wanted to at 2185. So this is really where the meat of support for platinum will be, between 2117 and 2185. This is where we are hitting support now at 2280. So platinum's in a pretty tight range over this past week between 2280 and 2450, right in here. But again, Thursday and Friday, we're leaking. We're getting some profit taking. We're seeing momentum stall. So I wouldn't be surprised to see platinum, if we get some more weakness, come down and trade towards the 2100 mark, somewhere between 2150 and 2100. That would look like a good entry point to me if we get it that low. So that's how I look at platinum in the current market. Let's look at palladium. Here's a 180-day look at the palladium futures contract. We had a peak back in July at 1365. We traded under that until we broke out in early October. Over 1365, we had a run up to 1692. And then we had some volatility, but we've got a pretty wide but a pretty established trading range with lower support here and upper resistance here. Now, as we get into the Christmas holiday and thin trading, we punched all the way up to 2129 for palladium. We've come back down. Now we're back into range. We bottomed right at support, and now we've hit a rolling over shoulder pattern, which shows that we're seeing some weakness. Here's the same chart over 20 days on 1-hour bars. I've got short-term support here at 1750, with the next level of support will come in here at 1547. I don't think we're going to see that, but we could see palladium come back down to about 1600, 16 and a quarter, maybe 1650 if we get some real weakness. But this is what we've seen this week, which is stalling of momentum, a peak, and now we're seeing some profit taking. Let's tighten this up a little bit. 5 days, 5 minutes. Here's the peak that we got on Sunday night in Asia before we opened in New York. We've come close to it, but just under it on Wednesday. But now we're seeing a weakening phase here with sell-offs on profit taking as this market has kind of stalled a bit. So that's how I look at gold, silver, platinum, and palladium on the futures contracts. Let's drill down to 1 minute and see if we see anything interesting there. No, just a weaker, generally weaker market, which brings me to one other image, which is the gold to silver ratio chart, with silver punching up so much higher over the last week or so relative to gold. Looking at the closes today, we're going to get gold just under 4,600 and silver probably just a hair over 8,950. That brings the gold to silver ratio down to the lowest we've seen since 2011 at 51.39 to 1. We were a little bit lower than that earlier this week before silver took a tumble under $90. We hit gold to silver ratio at 49.68 to 1. And we're rebounding just a little bit from there. But silver is overvalued if you look at the gold to silver ratio chart the way we do, with the equilibrium point at 62.5 to 1. So silver's made a big move, but we may be rewriting the chart to a degree, and we may be at these lower ratios for quite a while, the way the silver market fundamentals are looking very strong. But we could see some tentative trading over the next week or so, which is the purpose of this video. So I do see that we are in a mildly corrective phase for precious metals, with the metals upward momentum stalling this week, but they're still holding very near their recent highs, which looks good. And that's what I've said all along, is this market has been driven by physical buying more than speculative buying, is that the corrections, when we get them, tend to be more short and more shallow, because you have a stronger fundamental base under the market that's not speculatively driven by leveraged paper traders. So again, if we get a dip that I think we could get, gold looks attractive at 45 and a quarter, and then very attractive under 4,500. Silver, I think, is going to look attractive under $85 if we get that. I would jump in with both feet if it gets under 80, which I think is highly unlikely. But I do think we could see a little bit tentative silver price over the next week or so, which gives us a better buying opportunity. For platinum, I would be looking for the 2150 mark. If we get that, 2200, we may not. And for palladium, 1750, 1700 looks like a real buy to me. I do think the trend will be higher, but when you make such big gains in such a short period of time, corrections are inevitable. They're healthy. They help to shake out some of the weaker players in the market and put the market into stronger long-term hands, which is what this market has really been in now for months. So if we get a little bit of a dip, I would take advantage of it. And I'm certainly going to do so myself. So that's my update for today. Thank you so much for your time, and good luck out there.